Bismillahirrahmanirrahim. Welcome to our session on Islamic Finance 101. In this session, I'm going to take you through the very simple process of an Islamic bank operating in the real world. In other words, we would like to know how does an Islamic bank work vis-a-vis the conventional bank, which are their counterpart in the financial system. In fact, Islamic bank does not differ that much from the conventional banking system in terms of operation, because both entities are regulated by the same regulator. So they need to put the minimum requirement of behavior to ensure that the whole operation are up to the mark as expected by the regulator. So they need to put the required capital, if you like, and the shareholders would be the most important organ to provide the necessary capital, and they are supposed to top up the capital in the case of new requirement by the international or the domestic requirement from the capitalization point of view. And they need to set up the management of the bank, and they need to put a board of directors to oversight the management behavior, and the BOD can also set up different other subcommittees to look into audit, governance, nomination for the promotion, as well as the remuneration scheme for the staff. So this is a typical structure, and the bank, Islamic or otherwise, should have some consultant. They might engage the consultant, lawyers, risk expert, actuarial. In the case of say, banking and finance, they need to employ, not really employ, to engage with a body of Sharia scholars to behave like a Sharia committee to the bank. So this is how an Islamic bank should have in order for them to move forward. When they have the license granted by the regulator, they are ready to roll out the products. They have the management, they have the BOD, they have the Sharia committee to help them, and all the products are in place. So they need to look into a few things. The first thing they have to look into would be the source of funding. From where are they going to get the source of funding for them to support the financing or the asset of the bank? So this is what we call in the easy language the deposit or the liability side of the bank. Any bank, Islamic or otherwise, need to raise the funding from the public, both retail and the corporate depositors. So this is the action of deposit taking activity. So the bank have to put some products, either simple or complicated, to source the funding from the surplus unit of the society. Of course, the bank is very well established, well regulated, and people in most cases have the confidence to put their extra money or surplus money at bank level. And this is how Islamic bank should be able to put various deposit products to attract the relevant market and relevant public to come and park the money under saving account or current account, or perhaps investment account, or any other such a product account to really generate the source of funding. Because the capital contributed by the shareholders is not that much compared to the deposit to be mobilized by the public. So a bank function is to mobilize the deposit from the public, and it helps the country as a whole, because when the money can be mobilized, the money can be used to support the whole economy development of the country. So after putting the whole infrastructure to take deposit and to recognize the deposit and to manage the management of the deposit, the bank has to set up another operation, which is the financing side of the bank. Because the money cannot be left idle, the money should be mobilized from day one to generate the income for the deposit, and to give back the return, if any, back to the depositor, the public at large. So this is a more interesting, if you like, discussion, where an Islamic bank have to be able to put various type of financing product for short term, for long term, for retail, like car financing, mortgage financing, credit card, personal financing to some extent, and as well as the corporate sector requiring a lot more financing amount. For example, the LC, the syndicated financing for 100 million, 200 million, project financing, and perhaps the so-called overdraft or Islamic overdraft, the ability to withdraw the money as and when they need the easy cash to support the shortfall of the cash flow, to support the salaries to the staff, to the consultant, whatever they need in the short term kind of cash requirement. So this is how the financing asset will be built by the bank to provide each and every relevant product for each and every relevant fund users in the society, from the retail customer all the way to the big customers in the community. In between these two transactions or two activities, perhaps many who could not see the real function of the bank has to manage the treasury. It looks simple, taking deposit and pay back the profit under Sharia perspective, or interest under conventional, and give the money to the fund user. But in between, the bank as a bank has to be very extra sensitive to the treasury management of the bank, because the bank cannot be giving out too much or having exposure to too much illiquid asset for them to recover the asset when they need to be liquid and solvent. So this is the function of treasury. Treasury is the most important function of a bank, and but not many people is aware of this function because they are not on the radar. They are basically at the back office. So people look at the bank from the deposit perspective and the financing perspective, and the public are not dealing with treasury that often. They just deal with the deposit sector, the counter if you like, as well as the financing if they need to take the money from the bank. But treasury is very important segment, and treasury has to manage the asset and liability mismanagement, because if the assets of the bank do not match the liability of the bank, or vice versa, the bank will be having lack of proper management, and if that happens, the bank has to take more fund from the market. And if they were to take more fund from the market to make sure that there's no mismatch, the cost will be higher. So the bank has to, if you like, to come to the interbank money market and perhaps to issue sukuk to the market to get more funding to stabilize their asset and liability management. If the liabilities is only 1 billion, the exposure to the asset is more than 1 billion, so they have to have another sukuk. And the same goes to the tenor of the asset and liability. If the liabilities or the saving, current and investment account are typically short term for 1 month to 1 year to 3 years and 5 years, but the asset financed by the bank most of the time are long-term kind of financing from 5 to 10 years, sometimes to 30 years, so there will be some mismatch in terms of tenor. So they have to have something which is a long-term liability to match the long-term asset. And for that matter, many banks we have seen, they have issued their own sukuk to have sukuk of 7 years, 5 to 7 years and 10 years to manage the mismatch of the short-term liability and long-term asset. Not to mention the tenor, not to mention the risk of the mismatch of the profit to be paid and profit to be earned from the financing asset. So the bank has to manage the treasury by having a very complicated word is a profit rate swap. They have to swap the expected profit from the asset to match the expected liability from the deposit side. So they have to have something in between to manage the improper if you like, matching between the asset and liability in terms of the cost of fund at the end of the day, how much they have to pay the depositor and how much they are going to get from the fund users, the customer. So this is a matter of strategic decision to be performed by the Treasury Department of the bank. So in whole, as you can see, these are the three functions of a bank, Islamic or conventional bank for that matter. So in order for us to understand really how does an Islamic bank work, we have to understand the deposit and also the financing part of it. And more importantly, I have to stress here the treasury function of an Islamic bank. We have to be compliant to Sharia principle all the way. We cannot afford to have an Islamic bank which is good in Islamic deposit, Islamic financing, but they are not good in managing their treasury products to manage the risk of profit rate, the risk of currency, the risk of default, the risk of volatility in terms of their financing asset, in terms of market risk and exposure to the other external factors of the world. So this is very crucial, and I cannot emphasize further but to say in order to have a good Islamic bank moving forward, we have to be excellent in your deposit product, in your financing product, as well as in your treasury function and products moving forward. Now we come to another aspect of offering Islamic banking financing asset to the customer. I think we have mentioned in the last session that Islamic bank have to focus more on financing real economic sector in the society. How beautiful would that be if all Islamic bankers can understand and appreciate and embrace and put the effort to internalize and put this into practice in a big scale, because Islamic bankers are supposed to support each and every value chain of financing in the community, be it a small or medium or big enterprise in the society. To do real economic financing activities is difficult for the bankers. They need to be upgraded, to be upskilled, for them to understand the whole value chain of the financing. Somehow we have seen in the market that some of Islamic bankers, they don't understand their very function of becoming an Islamic banker. They thought they are still managing the credit as if in the case of conventional banking product. They simply give the loan to the borrower. The borrower happens to be a trader, a manufacturer, an IT producer, a cocoa farmer. It doesn't matter whoever they are, but the bottom line is that the credit should be paid back on time. In the Islamic banking environment, an Islamic banker must be more sensitive to the requirement of the real economic activities. They need to be a partner in terms of looking into the business plan, the cash flow, and they need to restructure the Islamic financing if needs be to allow the real trader to move on. And they cannot be someone who is very much embedded and influenced by the credit decision. They have to look from the business decision to support this particular trader to move forward. More so, we have seen in the market when a trader got stuck in his cash flow, our Islamic banker tend to behave like a credit officer, trying to put all the constraint and limitation for him not to continue with his business. Any cash flow problem or tight cash flow problem will kill off not only the person but also the business of the future. So Islamic banking must be able to appreciate, and they cannot be using the mentality of consumer financing. Because under consumer financing, the cash flow is quite safe, if you like, because everything will be deducted from salaries of the customer, because everything is tagged to the salary and there's no issue of cash flow in terms of consumer financing. This is a point that I would like to impress. That could be the discussion in the next session to see how could Islamic Bank, after having all the infrastructure ready for them to become a better Islamic banker supporting the real economic sector of the society. Hope the session will open up many other issues in the coming session. Thank you very much. Have a nice day.